Hello and welcome to another episode of Property Ponderings, the podcast where we dig deep into the world of property buying, selling and renovating, giving you advice to ponder. My name's Craig Nicol, your host. I'm a licensed real estate agent in Melbourne, Australia with over 15 years of property experience as an agency owner, property investor, renovator, town planner, salesperson, auctioneer and buyer's agent. I want you to make better property buying, selling and renovating decisions to build the future that you are chasing. In the episode today, it's all about the dynamics of property investor activity in 2024. RP Data CoreLogic brought out an interesting report, which I want to chat through just to have a look at some of the points that they've come up with and some interesting analysis of investors and how they are finding the market at the moment and maybe some predictions as well moving into the future. So by the end of our chat, you'll understand the forces driving new investor demand, the shifting behaviours of investors across the country, and what these trends could mean for buyers, sellers and renovators alike. So let's dive in and get one step closer to your dream property. Let's firstly start by unpacking some of the key trends from the report. According to the latest research from CoreLogic and the ABS, new investor loans have surged nationally by 18.8% over the past year. This signals robust demand from investors looking to expand their portfolios. Yet there's a bit of a twist. The number of investment properties coming to market isn't keeping pace with this rise in demand. In simpler terms, there are more people looking to buy investment properties than there are investors willing to sell. This imbalance could be one reason we're seeing reduced overall investor listings compared to peak activity in 2021 when selling conditions were ideal and home values were up by nearly 25%. Another thing we want to look at is a bit of the regional variations. So if we zoom into the states, because property trends often differ depending on location, in 2024 we're seeing a clear divide. There's high growth states like Queensland, Western Australia and South Australia that are experiencing a surge in investor purchases. These states have seen strong capital growth recently, making them appealing to buyers, yet the supply of new investment listings in these areas is below historic averages, suggesting that current owners are holding on to their properties. In contrast, states like Victoria, Tasmania and New South Wales are seeing elevated levels of investment listings. This is driven by several factors. For example, in Victoria, soft capital growth and increased holding costs due to changes in land tax thresholds are prompting some investors to exit the market. Similarly, in Tasmania, rising interest rates and declining home values may be nudging some investors to sell. Alright, so who are the investors? And another really intriguing shift in the profile of property investors in 2024, there are two key points here. There are less leveraged investors. So those with smaller loans relative to their property values are playing a bigger role in the market. These investors may be more resilient to rising interest rates. And the other intriguing shift that's being noted is that first-home buyers are entering the investment style market. While still a small percentage of overall activity, this group of first-home buyers is using investment properties as a stepping stone into the housing market, with affordability challenges in major cities. These buyers see renting elsewhere while owning a property or an investment property is a practical way to start building wealth. And now I want to talk a bit about the challenges that investors face. So while investor demand is strong, there's challenges that do remain. High interest rates continue to put pressure on profit margins, especially for highly leveraged investors. Add to this the increased scrutiny from government reforms around tenancy rights and property taxes, and it's clear why some investors are choosing to sell. However, the data shows that those exiting the market are outnumbered by new entrants, reflecting the resilience of property as an asset class. So how do these trends that are mentioned within the CoreLogic report impact you? So for buyers, if you're competing with investors in high growth markets like Queensland and WA, prepare for competition, especially at lower price points. Properties with strong rental yields and potential for capital growth will be highly sought after. So for sellers, if you've got an investment property in the stronger performing areas like Queensland and WA, it may be a good time to strategically sell, but of course there's a risk that the market does keep rising there. And it's the same sort of risk when you look at the flip side in Victoria and Tasmania. You may think that holding on to the property will be a good idea, but we don't know when that market is going to turn either. So it is a bit of a precarious situation, but of course work towards your strategic goals to understand what the best next step is for yourself. And the other person that we need to think about is renovators. So focus on upgrades that improve rental appeal. Think modern kitchens, updated bathrooms, and energy efficient features. These enhancements can help justify higher rents, making your property more attractive to investors if there are a lot of investors in the market in different parts of Australia at the moment. So that's worth considering as well. That sums up the CoreLogic report. A few interesting insights into what's actually going on and what has been happening in 2024. I know a lot of investors, especially in Victoria, are a bit unsure as to what to do, whether it was the right time to sell now or is the right time to sell, or whether to hold on to the properties as high performance capital growth may be around the corner. So it is challenging in that regard. But look, hope that's just provides you with a few insights into the current property market, especially for those that are looking to invest in property at the moment and you're trying to pick between different areas, trying to find the right type of property. It's just good to know what the general sentiment is around investment and whether you're going to be getting a lot of strong competition and what's actually happening so you can plan out your next move. So that ends another episode of Property Ponderings. And if you've got any questions that you're wishing to discuss from this podcast or from just your general property journey, feel free to reach out to me at 0400 122081. Of course, let me know about any questions or topics for future episodes as well. We'd love to hear from you. Otherwise, we'll chat again soon.
The information provided in this podcast is for general information purposes only and does not constitute financial, legal or investment advice. While every effort is made to ensure the information shared is accurate and up to date, it may not apply to your specific circumstances. Listeners are advised to seek independent professional advice tailored to their personal situation before making any property, financial or investment decisions. Nickel Bioadvisory and Craig Nickel disclaim all liability for any decisions made based on the information discussed in this podcast. Property markets are dynamic and outcomes can vary depending on factors such as location, timing and economic conditions. Always conduct thorough research and consult with trusted professionals before taking action. By listening to this podcast, you acknowledge and accept this disclaimer.